Right. So let's understand what is ETF. So as the full form of ETF is exchange traded fund. Well, so it trades like a stock. The way you so unlike mutual fund. So if you have already an idea about mutual fund, you go and buy mutual fund in a very specific period throughout the day. But ETF trades throughout the day on exchange. You can go and buy ETF through your trading demat account, just like you buy stocks. The concept of ETFs, like companies, they pull money from a lot of people, pull together, and then they invest this money for a specific purpose. This purpose could be a diversification to balance the risk. What is diversification? So instead of just buying one stock, you are buying 10 stocks. This is called diversification. But then if you're buying all those 10 stocks from the same sector, it is a diversification, but still very concentrated towards one sector. So what you need to do, you need to diversify among many sectors, and within those sectors probably one or two company pull together. So some of the ETFs could be very concentrated and some of them could be very diversified. Idea is that they have to go and achieve one objective. Okay, so in the last video you saw in the same class is about Nifty, that you can always also invest into the performance of Nifty. So if Nifty goes up, you will make money. If Nifty goes down, you will make the money, lose money in the same proportion, right? So how to invest directly into that? For that you have to go and find out what is the weightage of each stock among the Nifty, and then buy that much of value of stocks only for your portfolio. It may require even to, if you go and do in that fashion, that can be very cumbersome, very complicated. You will not be able to achieve as a retail investor for sure. Okay, your minimum investment size may even go up to 10 lakh or 15 lakh to achieve into the same fashion. So to simplify this, there are companies who said, okay, you all people give me the money, I'll allocate this money in such a way that it will track the performance of the Nifty itself. So to track such instruments, we have ETF, exchange traded funds, which can be traded on stock exchange just like this stock. So this is what is the ETF. Practically, if you really want to see, you have to again go to the NSE website, and there if you type ETF, you will see here there are many ETF which are listed there. Highly traded ETF right now on Nifty or the NSE is Nifty 50 company. So if you would have Reliance company, and Reliance and Nippon has a joint venture. Initially, sometime back, it used to be called Reliance Nifty Bees, but now I can see that it is written Nippon India ETF Nifty Bees. Probably it is a lot to do with how the Anil Ambani Reliance Group, have managed their business. So the point was to tell you that most of the Anil Ambani group companies are not doing well right now. I'm sure most of you are aware. So this is also a surprise for me when I'm recording this video. This Nifty Bees used to be Reliance Nifty Bees sometime back. Okay, but now I can see it is Nippon India ETF Nifty B. So if you go and open this market today has traded around 35 lakhs. So market has just opened 15-20 minutes back, and around half an hour back it's 9:51. So market opened at 9:15, it's 9:51. Around in 40 minutes you can see that 35 lakh trading volume has happened on Nifty Bees, Nippon India ETF Nifty Bees. So see, you can see it is 12,7,3. This is one unit, and this is just a replica of your Nifty. So it is just one unit. So with 1273 rupees in your account, today you can buy one Nifty B, and it will track the performance of your Nifty, it will track the performance of your market. So it is a way that without even taking anyone's help, you can simply go and invest into Nifty ETF and still get benefited by the stock market performance. Obviously, this will be, since the whole market has to grow, this performance may not be a huge return, so overall 10 to 11% compounded annual growth rate is there for most of the indices around the globe. from if you take last 30-40 years of data. So in India also, if the FD rate is 7%, 7.5%, then you can expect a return up to 10%, 10.5% for another 4-5 years. Again, in a very short term, market may come down by 20%, and you can still lose money into even ETF. It's not like ETF is a risk free instrument at all. No, not at all. ETF also can give you a hit of your portfolio. So the best way of probably getting into ETF kind of instrument, that you keep buying every month, keep buying every quarter, and buy it from a perspective of the long term, right? So hope you okay. There are other companies also who are managing these ETFs. You can go and see on NSE, but my suggestion would be, so that you have to go into something which have the highest liquidity. So Nippon India ETF Nifty Bs is having the highest liquidity. So every time you will come in the market to buy and sell, you will always get buyer and seller both, seller and buyer both. So there are other also which are there. So you can see Nifty Bank Bs. So it will track the performance of the bank Nifty. Okay. So yes, another point which I wanted to cover here, that since it's get traded like stocks, you have to give a brokerage on this. So obviously you should know what brokerage you are paying on your stocks. So similar kind of brokerage will be applicable for your Nifty ETF performance as well, but you need to check with your broker. It should not be high. These days, most of the companies can give you 10 paisa, 20 paisa kind of brokerage for buying, selling the instrument from their platform. Apart from the brokerage, since the companies are also involved into managing it, so there was a time when mutual funds were also managing it, and managing it with a very high expense fee. And that's the time when Nifty ETF got a lot of popularity, because the management fee was quite lower. You do not have to do much analysis here. All you have to do is manage it in such a way that your overall fund tracks the overall Nifty performance. So for that, they charge you 10 paisa kind of management fee also. Sometime it could be 0.05, which is 5 paisa also out of 100 rupees. So management fee will be there, fee will be there, but still it will be very, very low in comparison with the mutual funds investment. So ETF is very popular in Western countries from a very long time, but in India also it's gaining popularity, and ETF is one of the way how you can invest into stock market without taking anyone's help, and still track the performance of the stock market. So in next class, within the same chapter, we will also see whether it can be done through some of the mutual funds also, and some basic of the mutual funds. So we'll do that. Let's go to the next chapter, sorry. And in the very last chapter, we will learn about what is the comparison chart between mutual fund who are tracking Nifty performance and ETF, right? And then it's up to you, like how you want to go ahead. For some people, this part will suit. For other people, the other topic will suit, basically. Other product will suit.